it might be humanity's greatest invention. And when I say that, I know full well what people will say on Twitter and everything else when I look back at printing press and internet and everything else. But we have a habit of building on top of other great inventions and the next greatest. And so information creates more information and more error correction on that information. And this is a huge breakthrough. I think if you looked back at the printing press and the time of the printing press when it was invented, people wouldn't have thought that was a great invention against other inventions at the time too. So I think that's the level this is playing at, fixing money forever.
You described ESG as kind of nonsense in terms of fiat currencies and some of the goals. Describe a little bit more about what you mean by that.
So, and I want to be careful with nonsense because I'm in some companies and I'm chairman of 3 different companies that are doing a whole bunch in less carbon or climate change or
so things that are involved in ESG.
Things are exactly, but not washing, not greenwashing,
not a virtue signaling.
Exactly. Real companies that have created technology impact that lowers cost and provides benefit. So there's an economic benefit to drive, and so they're growing really. Some of these companies are growing really fast as a result, and it's exciting. So it's not I'm not a climate change denier and everything else, but so why is it nonsense? Quite simply, and I haven't seen an answer for this. I ask it all the time. How do you solve climate change through an inflationary monetary system? And let's poke on that. So let's use some examples. So you print a bunch of money, you make house prices go up as a result. So there's a whole bunch more jobs in building houses, and there's a whole bunch more lumber needed to put. So the entire economy, right, is actually gamed to grow faster, to emit more, because you're devaluing money to be able to grow faster.
So the environmental negative side effect is a negative side effect of trying to grow faster, which is all rooted from the devaluation of money.
Can you grow forever on a finite planet? Right. Pretty simple equation. Yet, so why do the only people that believe we can do that are economists? Right. It's logical. Information can grow forever. And so as information, essentially it's things become information, you get more for less. That's what's happening. It doesn't grow the same way that our notion of growth is changing with what's happening with technology, and so, or use oil. So so today we have new energy coming on through solar and battery storage and solar and storage, which is some of the lowest cost energy. Which is getting cheaper at 11% a year. And for a long time, that took subsidies to try to drive an industry to try to make it hit that point. And maybe you could argue today there's still some subsidies, but it's close to that tipping point where in some regions it's the lowest cost energy without subsidies. And it's getting cheaper. And so as that's taking more of the energy infrastructure, and it drives down prices. So if energy is the number one input in everything else, and prices are being driven down, then why are oil prices $70 a barrel or whatever? I haven't looked in the last little bit, but why are, and they're $70 a barrel because you've debased currency against oil, and oil is a scarce resource. And so those will go up, making oil more profitable, driving exploration and toil and everything else. So, and all of that was caused by printing more money. So again, Anybody on your podcast, reach out to me, find a way, put it on Twitter, how an inflationary monetary policy is congruent with climate change. And I'd debate.
You're saying that it's impossible.
It's impossible
for a inflationary monetary policy to be congruent with ESG goals and actually being serious about creating change in the environment.
It's impossible. Mm-hmm. It's absolutely. So when
does Bitcoin solve climate change?
Yes. Yes, it does. And it does.
Explain that, because you and I both know, I've said this before as well, and people think that's a crazy statement. Well, so explain
it. Because it forces a free market, because it forces technology to allow technology to do its job and save you time and reduce prices. So you're not on a treadwheel racing more and more and more through to try to like, why do we work in the first place? Right. If you, and I'll go back to, but you're trying to work to be able to have security in your life and to have enough things when you retire. So you're going to work 60 years of your life or 50 years of your life to retire with hopefully enough to live the last 10 years of your life. All while knowing that the goalposts are moving the whole time, trying to move further. So if you're in that environment, what would you do? You're going to try to take risks to get out of this environment. You might lever up a whole bunch of debt at the wrong time because central bank's policy is changed to be able to try to get off the treadmill because the goalposts are moving further and further away. So all of the incentives are aligned for everybody to do that job, when we wouldn't need to in a different system. The system itself would fix that. But that system is also responsible for all the climate change, or for all the climate damage and environmental damage, because it requires more and more and more and more forever. More things, more higher prices forever, or the system collapses. That's it, and that's why I say that system collapse is imminent anyways, whether through climate, whether through centralization of government, whether through revolution, so that there is a system change coming. Bitcoin produces, I believe, and by the way, when I was going through Bitcoin, I was looking for anything else too. I was looking for anything what could be a path to get to where technology is taking us, that is a plausible path, and it's only Bitcoin. Mm-hmm. And so because it allows for an equitable world. It allows for prices to fall. You're not wasting your time on this treadmill, and the externalities of that change means you get things for less, and it doesn't cause the same damage to the environment too, if you're talking about ESG.
Yeah.